Hey y'all, welcome back to Charisse Says. I'm grateful for the opportunity to take you to the next level when it comes to investing and give you practical money solutions so that you can have the wealth that you want. If you missed my last episode, no biggie. You can check it out at www.charissesays.com. As always, I invite you to tweet at me as the show is going on. Did you know that U.S. corporate profits after taxes climbed to $1.8 trillion at the end of 2014? According to Chicago-based stock research firm Y-Charts.
Damn!
They're right. That's a lot of dough. Anything that generates trillions of dollars is worth paying attention to because when you follow the money, you recognize the power it has in our society. And when it comes to investing, it's important to know that a company's ability to stay in business is a function of whether or not it earns money. And if you're going to be a serious investor or at least partake in making your money grow, you need to know what a company earns. And that brings us to our topic for today. Why do company earnings even matter? I'm going to cover three things. Number one, what are company earnings? Number two, how do company earnings influence the market? And number three, where do you go for earnings information? First point, what in the world are company earnings? When a company earns more from selling its goods or services than it spends on making those goods or services, it makes a profit. It goes like this. Revenue minus costs equal profit, also known as earnings. You learned this when you were a kid and we're just applying it to businesses. When profits are positive, a company has positive earnings. When profits are negative, a company has negative earnings. Listen, people, good companies have positive earnings every year. Remember when we talked about the stock market last episode? Well, companies that tend to generate positive earnings tend to see their stock prices go up. Yes, I am simplifying it a bit because there are many factors that drive stock prices. But striving for positive earnings is a good first step that management teams can take if they want to see the value of their stock go up over time. Keep this principle in mind and you can avoid wasting time and money on investments that promise the world and fail to deliver. Without reliable earnings, a stock investment is rarely worth your time. Now I know some of you might be thinking, well, Charisse, aren't there companies out there that don't generate a profit and have been widely successful as stocks? Well, you are right. A few companies that fit in this bucket are LinkedIn, Twitter, Zendesk. Look that last one up. These public companies are still trying to figure out how to turn a profit. These companies make sure that they got a lot of users and activity, and quite frankly, people do not care if they haven't turned a profit yet. However, most public companies do turn a profit. So if you have an investor who thinks that a stock is valuable in the absence of its ability to generate earnings, she may still buy the stock, which is all the more reason why you just can't follow that investor without understanding what's driving their buying decisions. As a reminder, company stock prices tend to go up when companies have positive earnings. At the end of the day, you need to know what moves a stock. Which brings me to my second point. How do company earnings influence the market? I'm sure you've read in the news a statement like this. So-and-so company reported second quarter earnings today. When I was a buy-side analyst at JP Morgan, my life revolved around company earnings announcements and company earnings releases. An earnings release is just a fancy name for a press release. Companies have earnings releases, usually quarterly, because shareholders and the public need to know what's going on with the company. And it allows the investment community to trade on those securities. I even had an earnings calendar. And during earnings season, I'd wake up in the morning, peek at my BlackBerry, yup, I did have one of those back in the day, and pray that my companies had positive earnings announcements. If they didn't, all I wanted to do was put those covers back over my head and stay in bed. Either way, I made my way to the office, sometimes bouncing, and sometimes just dragging. And when I finally got to the office, I jumped on an earnings call, which usually happened the same day as the earnings release. On these calls, management teams discuss their earnings results and take questions from big investors. Yikes! Imagine if you're the management team. Every 3 months, you have to go on record and talk about your results. I've been on some pretty rambunctious earnings calls when the earnings ain't pretty. Or as my grandma says, when the money start looking funny. But I don't feel sorry for these management teams because they are well prepared and get paid millions of dollars to do these calls well. The market cares so much about earnings announcements and earnings releases because they contain some of the most material information that public companies have and drive stock prices. You should care too about these critical dates and information because they are important factors in the investment decisions of people like you and me, investment companies, and the market as a whole. Once people have new information, they either buy more of a security, sell more security, or hold on and do nothing. And that is powerful. And that brings me to my last point. Where do you go for earnings information? There are 3 main places where you can go for earnings info. Number 1, look at a public company's website. Let's just say Nike, because I'm wearing Nike shoes today. And when you get to that website, check out the Investor tab. For a full list of instructions on how to navigate through the Investor tab, check out my blog. Number 2, check out a popular search engine like Google Finance or Yahoo Finance. These are 2 of my favorites. Number 3, utilize a respected financial outlet. When I worked on the street, I used Bloomberg, which is my favorite source for financial information. But Bloomberg is very expensive. I don't even use it anymore. A few other options are thestreet.com, earningswhispers.com, and msnbc.com. Even your phone probably comes preloaded with a stock or investment app. And if you have a brokerage account, which we'll get to later, you can find that information there. The trick is to use what works for you and no one else. And that wraps up our show for today. Now you can be confident in 3 things. Number 1, what are company earnings? Number 2, how do company earnings influence the market? And number 3, where do you go for those earnings information? On our next episode, we're gonna finally get to those brokers. So stay tuned. In the meanwhile, feel free to take this conversation to Twitter. And if you have a question or a comment, please leave it on my blog at www.charissesays.com. Until next time, I say keep building the wealth.